Here's our featured story of the day. BlackRock Bitcoin ETF delay conspiracy exposed by the one and only high priest, Max Keiser. He tweeted here, I think it was this morning, let's see, 12:38 p.m., January 4th. Yes. So here's what Max tweeted. Source: a delay in Bitcoin ETF listing connected to coordination with possible anti-self-custody laws. And he also made some other alarming tweets throughout the weeks. He wrote on December 20th at 9 p.m., which got 887,000 views. In 40 years of finance, I have never seen such a coordination and cooperation by so many financial institutions working hand in glove with regulators and politicians as I'm seeing with the coming wave of Bitcoin ETFs. I think we may be in for an unwelcome surprise. And let's continue down the rabbit hole. Seems like all these Bitcoin ETFs have agreed to cash in, cash out. Investors will track the price, but have no claim on actual BTC, a fiat money version of Bitcoin. Simultaneously, Washington is apparently looking to ban self-custody. That's right, referring to like that bill from Elizabeth Warren. Now, if this is true, it's exceptional due to the size of the highly coordinated bait and switch by Wall Street and Washington. The best way to beat this is to move to Bitcoin country, El Salvador. And this was off the back of the news that Swan launched here. Just in, firms are anticipating a decision from the SEC on Bitcoin spot ETFs shortly after January 8th. They are optimistic about the approval, but with a caveat. Unlike typical ETFs, this Bitcoin spot ETF would require shares to be purchased exclusively with cash. This requirement stems from the SEC's concerns about ETFs potentially being used for money laundering. And yeah, very interesting, as if the US dollar isn't used every day for illicit activity, such as money laundering, just as if JP Morgan Chase, the world's largest bank in the United States, that is, didn't have to pay over $38 billion worth of fines over the years for things like illicit use of their money, such as money laundering. But hey, I digress. Max continues, the timing of this is also interesting. A conspiracy theorist might say the 69,370 BTC are now a key part of the collateral backing these ETF rollouts. The government and proxies get the benefit of price appreciation on their actual Bitcoin as billions flow into the new fake Bitcoin ETFs. And this was off the back of the news that Gaber Gerbach shared here. U.S. Appeals Court approved the forfeiture of 69,370 BTC from the Silk Road case, which we covered here in the pod. People are speculating if and when the U.S. government would sell the coins. I wonder why one that can just print money would sell hard assets. Just a thought, and I think that's a great thought. What do you guys think about that? And let's continue down the rabbit hole. GBTC has approximately 600,000 BTC, making them the largest hodler of Bitcoin on paper in the world. I heard that number was closer to 620,000, just FYI. Now, the deal with the government to get ETF approval via the SEC and Gensler, and remember Barry, referring to Barry Silbert, has been caught engaging in accounting irregularities, so needs a friend in the Department of Justice, is to make those Bitcoin easily available to the government in certain circumstances, like an economic emergency that is 100% already baked into the cake. Now, interestingly enough, Barry Silbert has stepped down as the head or CEO, whatever his position was, over at Grayscale/GBTC/Genesis, which makes it all that much more interesting. Max also shares here, this is highly unusual, supports my theory, we'll find out soon enough, and that's off the back of this news. The SEC is holding a rare conference call, which was a couple of weeks back, with all the spot Bitcoin ETF applicants, and that was reported, the big meetup, and to discuss it's only going to be accepting ETF apps for cash in, cash out, which should be pretty alarming. He also tweeted here, this is unprecedented off the back of the news with all these major asset managers meeting with the SEC. And let's continue. Like the Sprott Physical Gold ETF, El Salvador's Bitcoin ETF will give investors a Bitcoin exit with the actual BTC. This will put the 13 Bitcoin ETFs to be listed in the United States to shame. So what he's ultimately hinting at here is that El Salvador is going to launch a real spot Bitcoin ETF with Bitcoin in and Bitcoin out that's going to put to shame all the rest. And I think he shared a few more things in regards to this. So let's continue with the tweets. Good news. We're looking into a Bitcoin ETF to list here in El Salvador. Shout out El Salvador and Bukele, that will allow Bitcoin in and Bitcoin out. This will be a unique product in the world. All 13 Bitcoin ETFs waiting for the listing in the US are cash in, cash out, just fiat versions of Bitcoin. And we all know what we think about fiat here on the channel, family. Trash. Now, he also wrote here, breaking the holiday season, El Salvador achieves a milestone. More people are fleeing the United States and migrating to El Salvador. Reverse migration is picking up speed. And the El Salvador Bitcoin ETF will be the real Bitcoin, not fake Bitcoin like BlackRock. So there you go. He's basically calling them out. So I got a lot of respect for Max, as he's an insider. And also wrote, another way to get exposure to El Salvador's incredible growth story. I'm getting great feedback with a plan to take the El Salvador Stock Exchange public in 2024 via Bitfinex Securities here in El Salvador. We're also looking to list a real Bitcoin ETF with Bitcoin in and Bitcoin out as well. Not like these fake ETFs like BlackRock. So there you have it. And let's continue with some more tweets. So Kathy Wood shared something, quoting her here. A spot Bitcoin ETF will be the most liquid way to access exposure to Bitcoin. And Max blew the whistle. False. This is misleading. All the new spot Bitcoin ETFs give investors exposure to a proxy instrument that tracks the price of Bitcoin, but no access to actual Bitcoin. And Max is right. It's cash in, cash out. You get the IOU equivalent. Now, this is Samson Mao retweeted this from Ben Van Hool. Regarding the ETFs, it's not that complicated. Constant additions by applicants and reviews by SEC. Pressure from legal cases. Issuers are spending on commercials already. That's right. We got the Bitwise commercials with the most interesting man in the world. And then you have the Hashdex commercials. And there's a few other ones that were just recently released that we cover here in the show. Some are even funding already. Correct. BlackRock's already funding their ETF, and many of the others are, which we have covered in previous episodes. The SEC is meeting with the exchanges. Institutions are screaming for a way to invest into Bitcoin. Weird things can happen, but a 90 to 99% certainty is not crazy. Now, Samson made a good point here. He tweeted this just the other day. Nipsey don't look, because he likes to chase cats. You don't sell your Bitcoin just because a prediction article said that the ETFs will be denied. That's right, because the entire market crashed. $3,000 Bitcoin crashed, at least, along with the entire market, just off the back of that one FUD article. Yeah, I mean, from Matrix Sport. So I no longer have respect for Matrix Sport, because the day prior, they were talking about it's inevitable. Bitcoin will get the ETF and we will reach $50,000 in the month of January. 24 hours later, they released that FUD piece and they said, oh, it's getting denied. We're not going to get any ETF this quarter, and we're lucky if we maintain above 40,000. So yeah, shame on you if you actually listen to the FUD. The cats are telling you straight up. Now, Bitcoin ETF race will push the issuers to disclose their addresses as well, according to Samson Mao. But I want to know your thoughts regarding this breaking news from Max that a delay in the Bitcoin ETF listing is connected to coordination with possible anti-self-custody laws. Let me know your thoughts. I'm going to read some more of your comments.